Hey everyone, this is Elijah K. Johnson with Liberty and Finance, here live with our good friend Steve Penny from the Silver Chartist. Steve, thank you so much for joining us today.
You bet, Elijah. Thanks for inviting me back on. We sure got a lot of things to talk about.
We definitely do, and we're going to look at the markets live this time with you and maybe pull up the charts here. But first, I did want to discuss the Trump administration, what we're seeing there, and also you've mentioned how it looks like, and a lot of people have mentioned this, that every few decades, probably every 40 years or so,
Mhm.
we see kind of a reordering of the global monetary system. We're overdue for another reordering, so it may happen under the presidency of Trump, and based on some of his picks, this could be quite interesting. So your perspective on that, and a lot of people have been talking about, could gold play a role in this? Do you want to, I guess we'll just if you want to take it from here.
Yeah, for sure. So I know you and I have been studying these things and been involved in gold and following the Federal Reserve and monetary policy for over a decade. I mean, I remember seeing you 10 years ago. But back then, 10 years ago, when you talked about a reordering of the global monetary system, it seemed kind of fringe and like something that it was for conspiracy theorists. And I would always say that it doesn't have to be a big dramatic thing. Every 30 to 50 years, let's call it, I like to say the rules of the game change in the global financial system. So for instance, go back to 1933 when FDR confiscated gold, revalued it up from $30 to, or excuse me, from $20 to $35. That's a $75 or 75% devaluing of the dollar. Then in 1944, after the Bretton Woods Agreement, the dollar became the global reserve currency. It was tied to gold. And then by default or de facto, every other currency was pegged to the dollar, which was pegged to gold. Fast forward to 1971, so about 30 years later, a few decades later, Nixon takes us off of the gold standards. That's another restructuring of the global financial system, followed by the petrodollar system, where OPEC sells its oil in dollars only. Those dollars are recycled back into the United States Treasury market. And that system has been in place now for about 50 years. So, this global financial system, the rules of the game are getting a little bit long in the tooth, and the signs are right in front of us that we could be on the precipice of some massive changes, not today, not tomorrow, not next week, but over the next couple few years. And I wouldn't be surprised to see the rules of the game change over the next 4 years. And they're being talked about more openly than I've seen in the 15 years that I've been studying these markets.
I know Scott Bessent, the Treasury Secretary pick, under this new Trump administration, has talked about kind of a restructuring of the monetary system, I believe. Your perspective on that, and what are some of the other kind of hints we might be hearing now?
Yeah, I believe the exact quote, if I can get it exact, was we are due for a reordering of the global financial system, or something very close to that. And he said, I want to be a part of it. That's Scott Bessent. And it's interesting that he would even say that. But there are other, if you really want to see people talk about the elites and the Davos crowd and what the central planners, like, what are they really saying? And a lot of that is found, kind of on like the fringe blogs. But if you really want to see exactly what these people are saying, you can go read their white papers. So, for example, there's something called the Interagency Working Group. That's the Federal Reserve Board in New York, the Federal Reserve, CFTC, and the SEC, and the CFTC, if I didn't say that. Anyway, they get together and they talk about things that they're not going to say on MSNBC or Fox News. And just recently, in their most recent report, you can even read like appendices and sub indexes of that report, which are additional white papers if you dig a little deeper, where they're even more candid, and they're talking about the long-term unsustainability of the U.S. Treasury market. Foreign buyers are stepping back from buying U.S. Treasuries. Hedge funds are already levered up. So who's going to be this new buyer or buyers of who's going to finance our debts? And they're talking about how to kick this can down the road, and they're talking about things openly like inflation, using stable coins of all things as a way to create demand for U.S. Treasuries. Even gold being revalued higher is on the table. And these are things that would have seemed like conspiracy theory, a couple few years ago. So I don't know exactly how it's all going to play out, but if you look at the national debt, as your listeners know, it's absolutely unsustainable. And I like to say problems have solutions, predicaments have managed outcomes. And this is not a problem that has a solution, this debt situation. It's a predicament and it has managed outcomes. So you can bet your bottom dollar that these central planners have managed outcome scenarios that they're working on behind the scenes for when this falls apart. and or they want to preemptively do it before it falls apart. And there's going to be winners and there's going to be losers. And the two choices are have, to default by a deflationary, collapse, not to use too dramatic of a language, or an inflationary environment. So I think history suggests throughout all of human history, inflation is the way they choose when governments are over indebted to an unsustainable level. So there's going to be winners and losers, and I see the next, handful of years being highly inflationary with sharp bouts of deflationary crashes along the way for sure that can be used as opportunities. But, I think there's going to be a lot of inflation over the next handful of years, and asset holders will be the beneficiaries, and people who hold things like long-term treasuries I see as, losing significant purchasing power in the coming years.
It is interesting to see, during these past times when we have seen kind of a change of the global monetary system, what has happened? Inflation, it seems like. So, like as you mentioned, back in 1933, the gold price rose, right, from $20 to $35, but really that was just a devaluation of the dollar. And then in 1971, when we went off the gold standard, Nixon, suspended the gold convertibility of the dollar, to quote him. And that suspension has never, anyways, it's still suspended,
Yeah.
but we saw gold go from $35 to, $850 just within, 10 years or so. So you mentioned inflation coming. How is this actually going to impact Main Street? What are going to be the effects you think that, the guys behind the scene might be planning for, and maybe passing on to these to Main Street here?
Yeah, I like to say there's a big difference between worry and concern. Worry is an unproductive emotion because it involves things you can't do anything about, where concern involves things that you can take action, proactive actions to, guard yourself against the thing you're concerned about. So if you're concerned about inflation, well, I think everyday people should take some prudent steps. So number one, I think silver and gold should be a portion of every single person's portfolio. That's my opinion. I'm not a financial advisor, but silver and gold have been the prime beneficiaries in this exact environment for millennia. Governments do what they do. This cycle repeats. Mike Maloney calls it the 7 stages of empire. And that's happened just over and over throughout history. And gold and silver always do a full accounting for the expansion of debt-based fiat currency. It just happens every time. So to me, that's the prime beneficiary. But also, having exposure to real assets and knowing that things like long-term government bonds is essentially loaning money to an entity that is bankrupt on a mark-to-market basis, and the only ability they have to repay you is to create inflation. So, to me, long-term treasuries, things like that, government promises, paper assets are likely to underperform by a wide margin, where hard assets, namely silver and gold, but other things as well, should be big outperformers over the next few years.
We do have a few viewers' questions here, and the title of this podcast we have here today is, how is this going to impact silver? And we have a viewer's question: do you expect silver to respond to monetary metal drivers or to respond to industrial metal drivers? So, as you mentioned, kind of this precious metals accounting for the increase of the money supply. That's assuming that silver is a monetary metal, where some people have argued more recently that it's acting more as an industrial metal. So do you see this same or even more upside in silver, given that I guess there's that controversial element?
Yeah.
Is it still a monetary metal?
Sure. Yeah. And some people I really have a lot of respect for have made that argument. And, I'm not going to necessarily argue back with them, but I will say one of the most dangerous things in investing is to say that this time is different, especially when you've got a track record that goes back millennia. So to say that silver is not money anymore, it's only an industrial commodity now, that things have changed, is, well, there's no history to support that. Now, sure, silver has lagged gold, but that is typical in bull markets. I mean, it's really lagged this time, but it's typical for gold to move first, then, the big gold miners, and then silver plays catch up. It plays catch up in rapid fashion. Now, as we're talking about how silver will play a part in the, some kind of potential restructuring of the global monetary system, I see gold being a part of this system, and that's evidenced by central banks buying it hand over fist. They're not buying silver per se. I guess, there's been some news, I think, that Russia was buying platinum and silver, but by and large, they're not buying silver. But I would fully expect for silver to participate in the big move up. The difference is that I kind of expect gold to kind of have a big run and then kind of plateau as it becomes more a part of the system, where silver is just crazy volatile. I think it's going to have its big run up and then, probably spike back down and lose a lot of those gains. We're a long way away from that. I see silver going up to triple digits in the fullness of time. But my short answer is I still see silver as money. It always has been, and I think it always will be.
Now, mentioning central bank buying of gold, we got the announcement that China has again started buying gold last month. It seems like they were on a little bit of a pause on their buying spree, but restarted it last month. Your perspective on that? And again, it seems like it's not just it's hardly maybe the U.S. planning for this sort of reset, and largely, the East and these other nations accumulating gold. It seems like preparing for some sort of gold or gold to be used as money again. Your take on China restarting their gold purchases?
Yeah, I think that's just logical for them, and I would expect for that to continue. And by the way, just to clarify, I'm not necessarily saying that gold will be like it has to be an official part of the global monetary system, like that currencies are going to be directly backed by gold, but I think it'll be it will play a role. I'm not sure exactly what that is, but there's a reason these bankers are buying it hand over fist. Now, as far as China buying it, I think they need to because they're, I believe, the third largest holder of U.S. Treasuries. So this is their insurance policy against, those long-term Treasuries. So if their Treasuries go down, their losses will be offset by their gold holdings. So, I don't see them stopping their buying of gold anytime soon because, they don't want to have that risk of, holding those long-term Treasuries that are eaten away by inflation.
And as for the markets, if we might be able to turn to gold and silver here, it seems like after the election we saw quite a bit of a pullback in both the metals, but a little bit of recovery now. Which metal would you like to start with?
Sure. We can start with either one, and I'll just address that briefly, maybe before I share my charts. And I think the pullback tied to the election has a lot to do with talk about decreasing government spending, stopping the fraud, waste, and abuse. This Doge Committee, Department of Government Efficiency, with Elon and Vivek. Hey, look, I'm all for cutting. There's plenty of fraud, waste, and abuse that they can cut for sure. Plenty of useless spending. But let's not kid ourselves. No matter where you stand politically, let's just acknowledge the facts that Medicare, Social Security, defense spending, and interest on the debt, those four items alone consume greater than the U.S. federal tax receipts. Those four expenses are more than we take in federal taxes every year. So they could cut everything else except for those four things, and they're still going to run deficits. So, like I said, it's not a problem that has a solution. It's a predicament with a managed outcome. So, great, let's cut some spending, but at the end of the day, it doesn't change the trajectory of where we are heading. And the biggest variable in that equation of when does this fall apart is interest rates. Because with a $35 trillion national debt, think about this. Every 1% rise in interest rates is $350 billion extra of interest expense every single year when the government takes in about $5 trillion. I mean, this is just simple math. I mean, you could explain this to a grade school kid and they'd say, yeah, it doesn't add up. But when you do it to the government, the average everyday person says, oh, they'll figure it out. They'll figure it out. There's a four-letter word for why this is not going to end well. And that four-letter word is math. And the laws of math aren't going to change because we have a new president.
I think that's so key there. And as you mentioned, the kind of the spending elements, that the spending that can't be cut, right, is more than we take in tax receipts. So it's it's fantastic that Elon Musk and Vivek Ramaswamy want to cut the deficit, but yeah, I'm skeptical as well that they'll actually be able to make a dent, right? There's a lot of useless spending that the US is in, but just taking, a couple million here or a couple million there, taking that out isn't going to solve, $1 trillion deficit.
Yeah, yeah, exactly. I mean, it'll be nice to know maybe some of our dollars, our own tax dollars, aren't going to fund things that maybe we find morally objectionable, or at least maybe a little bit less of that, hopefully. But it doesn't change the ultimate outcome. That's the takeaway.
Definitely. And if we look then at the gold chart right now, I know we're seeing a bit of a sell-off today, but your take on where we are here.
Yeah, for sure. Why don't I go ahead and share my chart? And this is a long-term chart of gold. I remember I was thinking back to an interview you and I did last year, pointing out this exact pattern here. And I talked about this cup and handle pattern. And I said, if you take this handle portion and flip it, it gives you a measured move target of $2,500. And if you flip this part over, which is an equally valid way of getting a measured move target, it gives you a target of $3,000. So I was saying, hey, for 2024, my target is between $2,500 and $3,000 once we get through $2,000, 2089 to be specific. I said that 2089 level is the key that unlocks a measured move to from 25 up to 3,000. Well, that we got that. So I got to be careful because, I have, sometimes I wear a long-term investing hat. Sometimes I wear my trading hat. So when I talk about my long-term investing hat, hey, if you don't have any exposure to gold or silver, I think probably the best course of action is to get some exposure. But if you're a trader looking to really time these markets and, make short-term capital gains, well, I think the risk reward in gold right now is really not super favorable. Yes, there is upside, and I'm bullish on it over the long term. But on this particular move, I don't see that much more upside. At the best, my upside target would be maybe 3,200, if that. That's the high end. So that would be about $500 from here. Not even 500. Well, the downside risk is about 500 as well. So it's only a 1-to-1 risk reward ratio if you're looking to trade, where silver is much more favorable. Silver upside target is maybe around 50 on the upside, give or take a little bit because silver's so volatile. But downside risk is maybe, 25 or so on the downside. And that's my own opinion, but the risk reward ratio is much more favorable. Same thing for uranium and platinum, much more favorable. So I'm not chasing gold here in my speculative trading accounts.
Now, when it comes to silver, can you maybe show us that chart and what is making you confident that, it probably wouldn't pull back below the 25 level, but also could rise to the 50 level?
Sure, absolutely. This is a long-term chart for silver, and as your listeners know, I mean, silver is the only commodity on the planet that is well below where it was 40 years ago, back in 1980, and it's way below where it was even in 2011. So you can make a case that it's the most undervalued commodity on the planet, with platinum giving it a strong, a strong run for its money there. But here's the chart for silver, and let me kind of straighten this out a little bit. This is the daily chart, by the way. I like to make my 200-day moving average yellow, and you'll notice my charts are very simple. I just like to put the things that are obvious to everyone, that like the big institutional hedge funds use and the algorithms use, and they all put a 200-day moving average. They put RSI, and then they look at basic patterns. So I try and do the same thing because it can kind of become like a self-fulfilling prophecy. So anytime you're above a rising 200-day moving average, that's a good thing. You're in an uptrend. So that means most of those algorithms are programmed to buy the dip mode. So that's a good thing. They're in buy the dip mode now. So I'm in buy the dip mode as well. So I see very strong support here right near 30. Now, if 30 were to fail, which if I had to guess, I don't think it will. But I like to say strategy is greater than predictions. Nobody knows for sure. I think it's unlikely to fail. But if it does, then you've got very strong support all the way down here, 2640. You can see every time it tapped it over the last, going back to March of 2023, fought it as resistance, punched through, and then back tested as support. So that's a very key level, 2640. It's hard for me to imagine silver dropping much below that level, if it even drops below 30, which I'm not necessarily expecting. So that's the downside risk to me in silver. Call that about $5, where you've got, around $20 upside potential. That's a very favorable risk reward setup. And then you look at, historically, whenever gold makes new all-time highs, silver tends to follow. It lags, but it follows. So much more bullish on silver for sure.
We do have a viewer's question on silver here. There's been a lot of talk about gold and silver being removed from the major exchanges. Fazdal asks, how much longer can the COMEX and LBMA sustain losing physical metal to buyers in the East? We've been hearing about these exchanges running out of metal, but they haven't broken yet. So your perspective on that?
Yeah, for sure. So let's go back 10, 15 years. Like you and I have both been doing this for a long time, and you can go back 15 years and talking about a force majeure on the COMEX. The COMEX is going to default, that there's multiple claims of ownership for every ounce that exists on the COMEX. Then I think it was 2013, these exchange for physical products came to supposedly arbitrage, anytime there's a difference between the futures prices. So I look at how, I'm not going to answer your question specifically because I don't know, but how I think about those things is, let's say the COMEX does default or some major there's some major default on paper products. And then there's a run towards physical. People say, I want the real thing. That's going to send the price of the real stuff for those who have it through the roof. And to me, that's like an upsize kicker. Like it's not my baseline expectation. It's not my basis for investing in the metals or speculating in them, but it's a very real potential that that could happen. I believe that there's many claims of ownership for every ounce out there in the world. And there's going to come a day where everyone says, I want my silver. I want to put my hand on it. And that's where the price for the real stuff goes through the roof. And, these paper products, people are going to be left holding the bag. So hopefully that helps to answer that question.
I think it does, and it brings us back to a point that you made. There's a big difference between trading the metal and
Yeah.
investing for the long term. One of the main reasons to invest for the long term is to get out of the financial system, hold something in your hand that is real value, right? If you're trading, well, that's digital anyways, and you're trying to, do the timing and everything like that. But I think if your idea is investing for the long term, why would then you keep that metal, in a financial institution? Why would you have some, bank watch over it for you, or have it on the exchanges, still have it virtually, if the whole point of investing in metal is to have
Right.
something real? So I think that kind of, again, brings that distinction between investing for the long term and trading. And I think, as you mentioned, it's just so important to kind of get out of the matrix, right? And to have something that you can hold in your hand.
Yeah. I can't remember the year. MF Global, the CEO was that crooked politician in New Jersey. Can't remember his name. Anyway, MF Global, there was a whole big issue, and people, they thought they had physical silver. I guess they thought that, but it turns out they didn't, and they got dollars in the mail instead for a fraction of what it was worth. I think Gerald Selene was a victim of that. I know you've interviewed him in the past. I remember him talking about it, but yeah, get the real thing. Be very cautious of owning paper products, thinking you own physical. And I'll say something maybe a little bit controversial, but because I think the Sprott outfit is fantastic, and I think they operate with integrity. However, I wouldn't conflate owning shares of PSLV, the Sprott Physical Silver Trust, or PHYS, the Sprott Physical Gold Trust. It's not the same thing as owning physical. And people will say, oh, well, you can take delivery. Um, that process is not as easy as you might think. It's pretty burdensome, and you need to own a pretty hefty position. I forget the details, but I'm all for owning those. In fact, I own PSLV right now. But that's where I look to take profits when we get overbought against extremes, where the physical metal, I'm not necessarily trading those in and out.
There are definitely, and I think, again, I mean, there's a difference between holding something. I think probably PSLV would probably be the best ETF
Yes.
out there. When it comes though to, holding something in your hand, there's, even just like on a psychological level, I think there's really no substitute for that. But I did want to maybe get to one of the viewers' question. It gets back to this whole idea of the Doge, the Department of Government Efficiency, Elon Musk, Vivek Ramaswamy. The viewer asks, and this is actually something that we were talking about before the interview. The viewer asks, I think that RFK can help out with the budget indirectly. Medicare spends an incredible amount of money on diabetes, for example. You can cure diabetes for free, ketogenic diet and fasting. We're not medical doctors, but your perspective on that. Do you think that, make America healthy again could actually reduce the deficit?
I think it might have a minimal impact. I don't see it having a big impact, especially over the short term. I mean, if you can educate a whole generation of young people on, my opinion only, take that food pyramid, flip it upside down, and you'll probably be a lot better. Uh, but I like the things he's saying, but I don't think it's going to have an impact on the deficit. And I had Crohn's disease, and I didn't take any treatment for it, and I cured it naturally. It's a supposedly incurable disease, so I'm all for that. Um, as someone who's more libertarian in nature too, I like the things he's saying, and I agree with that. But I don't necessarily want government dictating, because let's say RFK Jr. comes in and puts in all these policies, and everything gets passed, and we agree with it all. We're like, yes, but he kind of pushes the envelope of what is constitutionally acceptable. Well, now a precedent has been set, and what about if you don't like the next guy, and he's like, no, everyone has to eat seed oils and get every vaccine or whatever you might disagree with. So I would just say, as a libertarian, I'm cautious of, uh, even though I might like what they're saying, I don't necessarily want them having the power to, go beyond what the Constitution allows.
Definitely. And to wrap up here, we started this conversation kind of talking about how the monetary system may be in for a change. So did you want to remind our viewers kind of some of the preparedness steps that they should be taking and some of the effects to the economy and maybe their own personal livelihood they might be facing in the future?
Yeah, for sure. So I do think the global financial system will change. I think it's absolutely inevitable. The four-letter word for why is math. It has to. It's unsustainable. Something that cannot be sustained is going to change. So things we can do, if you think it's going to be inflationary, like all of previous debt cycles where governments expand to where the tax base can't support the debt anymore, well, then I think owning some silver and gold, that's kind of obvious on this channel. But I think there are other things you can do too. I like practical preparedness, logical things. Like, hey, if you eat a lot of, say, canned food, why not have some extra? Make your pantry a little bit deeper. The food's only going to be more expensive down the road anyway, so why not have some extra? 3 to 6 months of food supply. I think that makes a lot of sense. If our grid is very fragile, I'm not saying you need to go off and live in the woods and be that, but hey, why not have a solar generator so that you can power your fridge? Our systems right now are more fragile than they've ever been. And, I want to be in a position of resilience so that if and when these things happen, these hurricanes even that happened, I'd prefer to be the one who can go down to my neighbor and offer something. Hey, can I help you? Do you need some food and water? Instead of the one standing in the FEMA line when FEMA or the government agencies never even showed up. So, I think practical preparedness steps make a lot of sense in this environment.
Yeah, and to your maybe libertarian point there, becoming more independent, I think is just a good thing. I think we live in this modern society where, you know, all your jobs are, someone else does all your work essentially. Someone comes over to clean, someone does your dishes and everything like that. And it's like, hold on, wait a second. Let's take our independence back, right? And let's hold some of our wealth in our hands. Let's, take these preparedness steps, not just because we're scared, not just because we're concerned about what happens in the future, but because it's just a good thing to be able to, provide for our families, to have a safe haven asset that we can have in times of need, to know how to do things. I mean, these are all just good, virtuous things to begin with. And we don't, and hey, if there's a crisis, then maybe we can help out our friends and family and all that. Your perspective on that, it seems like these are just common sense steps.
Yeah, and if nothing bad ever happens, it doesn't cost you anything. You have some extra food that you're going to eat anyway, and maybe it's getting close to expiration. You're not going to be able to eat it. Well, you can bring it down to the food pantry. There's no waste there, so only good can come from taking some practical preparedness steps.
Fantastic. Well, Steve, we really appreciate your time today. If our viewers are interested in learning more, they can go to silverchartist.com. Can you tell us a bit about that?
Sure. So yeah, silverchartist.com. We focus on investing in not only silver and gold, but other hard assets. We invest for the long term, but we also trade for the short term. We use volatility to our advantage. We're not afraid to push the sell button when things get overbought against resistance, and conversely scale back in when we get oversold against support. So silverchartist.com is the website. Really appreciate you having me on again, Elijah. And you've got a great audience too and great questions. So thank you.
Well, thank you so much, Steve. And one of the things I really like about your service is you kind of get an over-the-shoulder look. You get to see your whole precious metal portfolio and how many shares you have and everything like that. It's everyone's financial situation is different, but it's really great to just be able to see exactly what you're doing.
Yeah. And they see the mistakes too, which I make my fair share of those.
Fantastic. Well, thank you so much, Steve. We'll put a link in the description of this video. You have a fantastic rest of the week, and God bless.
You too, Elijah. Thanks.